What's going on, guys? How are you doing? This is Shocks again, ShocksCapital FX YouTube channel. Welcome back to the channel. And guys, if you are new, this channel is the channel that talks about smart money concepts, ICT, BTMM, and everything to do with institutional trading. So today we have a kind of a very important topic to talk about. Today we want to talk about risk management in these Deriv indices. So you've realized most of you trade these indices like you want to win, like if you win, you win. If you lose, you lose. Like you are all in on the first trade. You want to make the most money out of each and every trade you take. So I'm here to show you how to actually trade consistently and profitably, and how to stay in the game, how to not risk everything at the first go and you lose again. So most of you will be saying it's either you go big or go home, and most of you will end up home. So what I'm just here to tell you is risk management is very important, and I'm gonna show you the exact way or the right way to actually manage your risk and stay in the game. So this concept will teach you how to experience life on the other side, because I know most of you are not profitable or are not consistent with taking money out of Deriv and any other brokers. So this can be applied anyway, but I'm just gonna do it as a Deriv Indices, synthetic index risk management course. So this is what we are going to do. We have this chart here which we are looking at right now. This is 13 past 11 my time, and as you can see, this is a proper setup which is unfolding right now. A break of structure, this is an order block, and this is a potential sell. I say potential because this might go all the way up and not sell. So because of that probability of it not going your way, because this would seem like a proper setup, a textbook type setup. That's what you say when you want to risk it. Oh, I know how the language. So this is a proper textbook setup, right? Most of you would go all in here, 30 lots, the 90 lots, because this is V50. So yeah, I wouldn't advise you to continue doing that. I would want you to manage your risk. So we're going to use this setup in explaining all the things we're going to explain in this video on risk management. Okay, first of all, you have to understand your risk capital. By risk capital, I mean the size of your account, all the money in your account. Because I always say this, it's not your money until you withdraw to your bank. So if it's still in Deriv, if it's still in return equity or balance in your trading account, it's not your money. It's not your money. It's only your money when it hits your bank. So this is what we are saying. That is what we are referring to as risk capital. So that money doesn't need to be money for fees, money for maybe bills, anything. So it has to be money you are willing to lose. Most of you would think money you are willing to lose is the money you are willing to lose at on a particular trade. No, all the money in your account, it means you are willing to lose that money if you are trading with it. So if your account is 10k, if your account is 10,000, it means you are willing to lose 10k. So if your account is big in such a way that in proportional to your money, the money you have, the actual money you actually have in your bank, if it's big such that if you lose, you are going to hurt yourself financially, then you are not willing to lose that money, and you shouldn't be trading with that capital, right? So that's that. So we just have to trade with the money you are willing to lose at one go. Do you understand? Then there is what we call risk per trade. So we are saying you have an account, right? We're saying you have an account of 10,000. Let's just say 1,000. Let's use 1k as our benchmark for this example. Let's say whenever you enter a trade, you are willing to lose 50 bucks on that 1k account. It means your risk per trade is going to be 50 bucks, and you need not to change this amount ever. So it's like you are planning your risk strategy. So you guys, I know you have your strategies and everything, you have rules and what. You also need to have rules, money rules How much am I risking? How much do I have? How much am I looking forward to gain? All that stuff. So you have to know how much you are willing to lose on a particular trade, and how much are you targeting on each and every particular trade. I know when you are trading these indices, let's take for example V75, V100. These are too volatile, they move a lot. And there's this tip I want you to master, or you can write this down. You need not to lose or win different amounts of money just because you are trading different commodities, right? This only means if you are trading V100 1S, like here, if you are looking for a sell at this point, let's say this is our order block and you are looking for a sell, if you are risking 50 on V100S, it need not to change when you go to V75. I know V75 moves, so this is where you need to be very smart and know how to calculate your risk, right? So the same amount of money you are risking on V51S should be the same amount of money you are willing to risk on V75, on V100, even on V10. Do you understand? That's why I don't like trading boom and crashes, because they don't respect stop losses and stop orders. So I stick to what I know I can control my risk on. So I need to know that I am controlling everything that's happening, right? So I trade these indices because they respect stop losses and everything. That's why I trade them. And as I said, the money you are losing or gaining needs not to change because you have changed a commodity. So whatever I'm going to say on V50 is going to apply to V75, it's going to apply to V10. It's not going to apply to boom and crash. Yes, I hope you got that. Then yeah, this is what we are doing. So now we want to go to this particular stage where we are actually calculating the risk. I know we don't have a proper risk calculator from Deriv, so I'm going to tell you how to calculate this using this app, using the MT5. So on this one you need to have like, let's say maybe you have the Deriv app, this Deriv MT5, and another separate MT5. It can be on your phone, it can be on another laptop, it can be on the same laptop, but you just download the MetaTrader 5 MT5, not the Deriv. So then you have two. Then the first one, you're going to have your demo account on the first, and you're going to have a live account on the other one. So the first one, or the demo account, is going to help you calculate your risk. As I said we are saying we have a 1K account right now. We want to risk $50 on every trade we are taking. And as I said this is a what? This is a sell, a potential sell. It can be a buy, but we are just going with probability. Since price is on your order block, you are just going to sell. So right, when you sell like this, you see the minimum lot size on V50 on Deriv is 3. So you are going to sell with the minimum lot, right? So let's sell. We have sold, right? That is a sell. Then we drag our stop loss to the top of the box like this. Do you see? And after dragging the stop loss to the top of the box, we will see how much we are risking on one trade using this this lot size, and that will be, let's go to 5.45. So we are risking $5.45 using 3 lot size, but we want to risk 50 and we have a 1K account. So if this is 3, it means we are going to enter how many lot sizes? So this is 5. We want to risk 50, so it's just times 10. So we're going to enter 30 lot size on our 1K account, and by that 30 we'll be risking $50, and we will be going for 150, which is 15. That is 1 in 3. So 15 is here. So this will be your take profit. So this is 1 in 3, right? So this is how you calculate your risk using these Deriv Indices, right? So your stop loss, you first put your stop loss on a demo and calculate how many lot sizes you are going to make on the live account. So this is just to calculate or to show you, to give you a picture of the monetary value you are risking on each and every trade you are going to take. I hope you got that. And yeah, guys, so after that, you know, then you will need, so this is a risk management video. So this is what you need to know risk per trade, right? We said 50, so you can be calculating this 50 in percentage terms. You can be saying, I want to not lose more than 5% or 2% on each and every trade I'm taking, right? That will always help you to know that, wait, I'm risking for 1%, so I'm going for 3%. So a risk to reward ratio is the other tool you need in your arsenal. You actually need this. You need to be 1 in 3. So this is where we are saying, if you want to trade like this, you need to have a strategy or a signal service that gives you at least 30% win rate. At least 30% win rate. I know some of the guys out there do more, but you just need 30% and 1 in 3 risk to reward ratio to make a profit. So if you can't do a strategy, you can join a signal service that is accurate and that gives you stop losses and TPs, so that you know what risk to reward ratio you are going for. So still on that note, let me just show you our indices, VIP, how we do our things. So this is what I'm trying to say. So this is a buy step signal. So we said buy step index, stop loss, TP. So what you do is you are going to buy step index first on your demo, put this stop loss and measure how much money that stop loss is. So if that stop loss is $5, or if that stop loss is $10, you are going to say, no, I need to risk $50. So you are going to open 5 positions, 10, 10, 10, 10 each, and you're going to go for $30 minimum. So you then measure again this TP and see how is it related to stop loss in terms of risk to reward ratio. So this was the trade. This was a buy. Yeah, my entries are super tight, thank you. Then this was the same trade. Then the next day we were selling jump. This was jump 25. We were trying it out and we were stopped out. So this is a loss. After this loss, we should not have hit our account. If you are risking $50 on a 1,000, the difference is not noticeable if you lose. That's what I'm saying. If you lose 1%, it's still okay. So this is a sell step index, a signal, and as you can see, we won. We were winning, and as you can see, I just showed you 3 signals and we're winning 2. So if you need to calculate risky, if you need to calculate the accuracy of the signals, yes, it's just 3, but you can see the picture. You can see the picture. So these are just setups which I was sending. So this is sell step again, step index, stop loss, and see. So this is the type of entries my signal subscribers are getting on a daily basis. This was a loss, V25S, they were losing, but it should not have hit your account. This is another sell opportunity, V100, and more than 1 in 3. You see, this is what I'm talking about, and you need to find things like this. This was a loss, and since it's a loss, it shouldn't hurt your account. And let's go to today. Today we, of course, we sold V51S, and you see, these were the results. So this is what I'm saying, guys, and manage your risk as you trade. Trade with a stop loss. Trade with a stop loss and calculate your risk. So guys, see you in the next video. I hope this was helpful. I'm Shocks and I'm out.